Hello everyone, good day. We are from Group 28. Together we conducted a study on a Tesla company. I begin with the introduction. Tesla is an electric vehicle company which is founded in 2003 by engineer Martin Eberhard and Mark Tarpenning. In 2015, Tesla announced its new lines of solar energy product, revealing the company's intention to penetrate the renewable energy industry. Tesla company has experienced two leadership changes before Elon Musk decided to take up the mantle of CEO himself in 2008 and marked the departure of co-founder, firing of 25% of Tesla employees due to its decreasing financing. By the end of 2020, Tesla's stock rose 61.12%, cementing its position as one of the most valuable companies in the world with a market valuation of $443 billion. Overall production declined 5% with a major 21.1% drop in first quarter 2025, driven by demand slowdown and supply chain inefficiencies. Higher inventory levels in first quarter until second quarter 2025 signaled weaker sales and reduced manufacturing output. Production rebounded with a 9.07% increases in third quarter 2025, supported by a new Model 3Y variants and expanded facilities. Model 3 and Y remain dominant. 2% production drop but 9% higher deliveries, driven by Europe APEC demand. Inventory days fell from 19 to 10 days, indicating faster sales turnover and stronger operational adaptability. I'm continuing with Tesla financial performance. Tesla total revenue grew 12% year over year, driven mainly by energy segment up to 44% and steady growth in automotive revenue up 6%. The strong performance in energy storage product like Megapack and Powerwall shows the Tesla growing diversification beyond vehicles. Tesla profitability declined notably as gross margin decreased to 18%, reflecting vehicle price reduction and cost pressures. Net income dropped 37% year over year, largely due to vehicle margins and higher operating expenses. Tesla cash flows remain strong, which may reflect completion of major factory projects to temporary spending restraint. Cash reserve increased to 41.6 billion, giving Tesla flexibility for future investment, R&D, and potential share buybacks. This strong cash position is financial strength, offsetting short-term profitability pressures.
So while Tesla is best known for its automotive car business, I want to draw your attention today to its second pillar of core mission, which is the energy storage deployment performance, as well as sustainability impact. So let's look at the data here. In figure 2.3.1, it highlights a massive operational milestone, which Tesla has deployed 12.5 GWh of energy storage in total in the latest quarter, the third quarter in 2025. And that is an impressive of 81% of year-over-year increase, driven largely by the successful ramping up of the mega factory in Shanghai, which is now currently producing more than 10,000 of mega packs annually. And this operational skill has directly translates into financial success. As you can see here in the figure 2.3.2, the segment here has hit a revenue of total 3.415 billion, which is a 44% of increase from last year. And this validates that sustainability is not a cost center for Tesla, and it has proven to be a self-funding, profitable, and rapidly expanding part of its core business. So while Tesla is best known for its automotive car business, I want to draw it. Now let's look at the short-term predictions of Tesla in immediate future in 2025 and 2026 next year. We identified 4 key trends. So first of all will be the production. We expect a recovery of 8 to 10% of production output as the gigafactories of Tesla in Texas and Berlin has improved its efficiency. Margins will most likely remain under pressure from 17% to 19% as Tesla continues to cut prices to fend off competition, particularly from Chinese EV brands such as BYD. And moving on to the demand sector, despite a small dip in production previously, demand for the Model 3 and Model Y remains very strong, driven by a global cultural shift towards sustainability. And moving on to the energy division, we believe it's a stand-up performer as we project to grow 40 to 50% next year as global renewable adoption has accelerated. Last but not least will be the financial outlook. Despite some short-term pressure on profitability due to the price cuts, Tesla balance sheet remains incredibly resilient. As of the latest quarter, third quarter of 2025, the company holds 41.6 billion of cash reserves right now. And now looking further ahead to 2030, we predict 4 major shifts. First of all, the global expansion. Tesla is on the track to produce 3.5 to 4 million of vehicles annually by 2030, expanding deeply into emerging markets such as India and Latin America. Moving on to the technology sector, by 2028, we anticipate Tesla to achieve the level 4 full self-driving known as FSD to become commercially viable, unlocking entirely new revenue streams through robo-access and software subscriptions. And perhaps most significantly, the energy sector will no longer be secondary. We project it will contribute 25 to 30% of total revenue of Tesla by 2030, solidifying Tesla's position as a global leader, not only just cars and automobiles, but in a great scale of energy storage provider. Last but not least, for the cultural adaptability. Our analysis shows that success depends on tailoring strategies for different markets. So for example, in the individualistic market in Western countries. So Tesla markets itself as the global tech leader, tech identity. However, in collectivist markets such as Southeast Asia, the focus of Tesla should shift towards affordability as well as community welfare. To summarize between the contrast of where we are and where we are going, let's look at the table here. Currently, we see a record of 12.5 GWh of energy deployment and very strong deliveries, yet we face operating margin pressure due to the rising costs. However, the future trends paint a different picture. The current dip in margin is actually a very strategic investment of Tesla. The massive cash reserves are being deployed into AI and manufacturing skill, and as this investment mature in the future, the cost structure will stabilize, and the energy boom we are seeing right now will become a dominant long-term revenue stream driver alongside the automotive car business of Tesla. In conclusion, since its founding in 2003, Tesla has evolved from a niche automaker to a resilient global powerhouse. Despite short-term hurdles like price wars and production lags, the company's strategic diversification is paying off. By balancing its automotive dominance with a rapidly scaling energy business, Tesla is positioning itself to be financially stable and influential to the next decade. It is transforming into an all-encompassing clean energy provider, driving the next level of environmental advancement.